In the pulsating heart of Silicon Valley, where technological dreams are forged in dusty garages and bits and bytes of code are woven like threads of gold, an epic tale of meteoric rise was about to be written. Welcome back to Corporate Catalysts, where we take a closer look at the world's most fascinating businesses, brands, and icons. This is the story of Supermicro Computer, a company that defied all odds and went from the humble shelves of a small workshop to become a multi-billion-dollar giant that shook the foundations of the tech industry and carved out its place in the stock market. On November 1st, 1993, three immigrant visionaries, Charles Liang, Wally Liao, and Sarah Liu, teamed up for a bold mission to start a top-notch server company from scratch. Armed with little more than bright minds and strong determination, they set up Supermicro Computer in a humble garage in San Jose, California, initially as a 5-person operation. Today, Supermicro doesn't just make high-performance servers. They also specialize in storage, blades, rack solutions, networking devices, server management software, and top-notch workstations for data centers, cloud computing, enterprise IT, big data, high-performance computing, also called HPCs, and integrated markets. Sure, back in 1993, these services might have sounded like something out of a sci-fi movie, but today, they're the backbone of many high-tech businesses. That's why, in those early days, the dream seemed almost impossible. Liang, Liao, and Liu, along with their small team of enthusiasts, worked tirelessly, putting together top-notch servers among shelves filled with parts and tools. Sweat and determination were their only weapons against the big tech companies already dominating the market. But these entrepreneurs had a trick up their sleeve, a relentless focus on innovation, energy efficiency, and unmatched performance. While other companies settled for the same old storage and computing solutions, Supermicro Computer set out to push the limits of what servers, storage solutions, blades, and networking devices could do. As the years passed, the dedication of this visionary trio and their team started paying off. Their state-of-the-art products, designed for maximum performance with minimal energy use, caught the eye of demanding customers worldwide. What began as a small operation in a garage grew into a fast-growing company, taking on the established giants. Perseverance and always staying ahead with new ideas were what made Supermicro Computer successful. While other companies stayed the same, Supermicro was always moving forward, predicting what people would want next in areas like cloud computing, big data, high-performance computing, and other markets. Year after year, the company saw profits, turning innovative designs into a steady stream of revenue. In its first 15 years of operation, this young upstart amassed an impressive $2 billion in sales. Investors quickly noticed Supermicro's potential. In August 2006, the company officially became a corporation in Delaware, getting ready for a big step forward. 9 months later, in March 2007, Supermicro had its long-awaited initial public offering, in which it raised $64 million by selling 8 million shares at $8 a share. This was a strong sign, showing that it could grow even more and get more attention. The fiscal year 2008 was a turning point for the company. With a strong reputation in the market, Supermicro made $541 million in revenue, setting the stage for even more growth. By the end of that year, the company had over 800 full-time employees worldwide, with more than 650 based at its headquarters in San Jose. A team of 300 smart minds drove innovation in research and development, while 330 skilled professionals handled production. But Supermicro didn't stop there. In fiscal year 2015, the company reached new highs with over $1.9 billion in revenue and over $111 million in profits. This financial success came from a bold vision, flawless execution, and an unwavering commitment to technological excellence. As its presence grew, Supermicro became a global player, operating in 80 countries around the world. Its customer base expanded to include over 800 leading organizations, all attracted to the cutting-edge solutions and focus on innovation that define the company. But the path to success was never without obstacles for anyone, and the same was true for the startup. In 2006, the company admitted to a serious offense after selling over 300 of its motherboards to a sanctioned entity in Iran, resulting in a $150,000 fine. Their reputation took another hit years later in 2018, when Supermicro faced an unprecedented scandal. This bombshell was revealed by Bloomberg in October of 2018. In an extensive investigative report, they claimed that China had infiltrated companies like Apple or Amazon, as well as government agencies like the CIA and the Department of Defense, through spy chips implanted in the motherboards of their servers. And you know what? These motherboards were made by Supermicro. According to Bloomberg's story, after numerous interviews with unnamed sources, the report claimed that there were servers where the motherboards had been altered with a spy chip that intercepted all communications from those servers. The chips were allegedly implanted in the motherboards by employees at the manufacturing plants in China, and the managers of these plants were supposedly bribed or coerced by the Chinese government to install the chips without informing Supermicro. There were even reports suggesting that Ethernet ports on servers might have been used to spy on communications from a major US carrier. But Supermicro didn't just stay quiet. The company announced that it would be conducting an independent review of its motherboards for any potential spy chips. This would include the specific type shown in the article, boards bought by the mentioned companies and recently manufactured ones. They didn't find any spy chips like Bloomberg described. Supermicro kept denying the accusations strongly, while Bloomberg stood by its reporters. In the end, it was a war of words with serious consequences for both sides. This cut the company's stock value in half, but only temporarily. In an ironic twist, the Bloomberg technician interviewed, who supposedly spilled all the espionage details, emphasized that it wasn't a Supermicro-specific issue, but rather an international supply chain problem. As it turns out, Bloomberg misquoted him in their article. Despite facing challenges, Supermicro has managed to bounce back, with its stock skyrocketing by 222% in February 2024 and surpassing $1,000 per share. Since 2023, the rise has been an impressive 932%. However, this growth occurs in the shadow of another major player you're likely more familiar with, NVIDIA. So why such a dramatic increase? And how does NVIDIA fit into all of this? Well, the answer lies in the incredible and highly sought-after technology of recent years. Ever since OpenAI introduced ChatGPT in November 2022, everyone, including tech giants and regular folks like you and me, wants to be part of the innovation and money-making opportunity. Artificial intelligence offers exactly that. This is why Supermicro, originating from a humble garage on the outskirts of San Jose, with its high-performance servers, has become a hot commodity among investors seeking to capitalize on the AI frenzy. However, Supermicro's approach is different from that of chip manufacturers like NVIDIA. Instead of manufacturing graphics cards or processors, Supermicro buys and develops more efficient machines with integrated memory or powerful servers, which it then sells to tech companies. Now it's a computing company competing against IBM or Google Cloud, with chip manufacturers like NVIDIA, AMD, and Intel in its supply chain. Even though Supermicro operates in a lower league compared to the tech giants like Alphabet, Amazon, Apple, Meta, Microsoft, NVIDIA, and Tesla, the Big Seven, analysts value the company for its business model, which is almost tailor-made and customized for each customer. The rapid changes demanded by AI make it less vulnerable to supply chain shortages and limitations. Its close ties with Taiwanese supplier Abelcom, founded by Liang's cousin, also work in its favor. So, despite its smaller market position, Bank of America raised the target price to $1,040 per share and hailed it as a powerhouse in a rapidly growing market. This firm epitomized the extreme fervor for AI, like NVIDIA on steroids. Supermicro's revenues have steadily increased over the past decade, although they are nowhere near those of heavyweight chip players like NVIDIA, which earned $60.9 billion for the full year. Supermicro has indeed benefited from investor, manager, and analyst enthusiasm for all things related to AI. Consequently, the company's value has multiplied tenfold over the past decades. While the business has also grown, it hasn't kept pace. In 2017, the company generated $2.5 billion in revenue, earned $68 million, and was worth $1.2 billion. In 2023, Supermicro generated $7.1 billion in revenue, a 37% increase over 2022, and earned $642 million. However, the market capitalization has skyrocketed to $47 billion. Going into 2024, forecasts predicted a doubling of revenues, reaching $14.5 billion. And now, after the stock price has soared by more than 20 times in 2 years, Supermicro finally joined the S&P 500 in March 2024, with a record surge that pushed the company's market value to over $50 billion. Just so you know, the average market value of companies in the S&P 500 is $33.7 billion, a number that, as you can see, Supermicro exceeds. Pretty incredible, right? But is everything as good as it seems? Well, doubts about Supermicro arise from this extreme surge in stock prices, reminiscent of the early days of the internet. The most critical analysis firms warn that valuations of US tech companies are approaching the same levels as the dot-com bubble back at the turn of the century, where the instinct is to follow the buying trend. Some analysts believe that the potential of the big tech companies is nearly exhausted, and point out that the top 10 firms already account for a third of the S&P 500's valuation. On the flip side, some experts think that the company relies on clients who build small-scale data centers. Google, Microsoft, Meta, or Amazon Web Services create their own data centers. This trend might also happen with artificial intelligence, which needs big investments. Big tech companies are even thinking about making their own chips. However, Peter Oppenheimer, head of global strategy at Goldman Sachs Research, believes that the market isn't like it was before the dot-com bubble burst, and he doesn't think history will repeat itself. He thinks we're still in the early stages of a new cycle that will probably bring higher returns. But even if the giant NVIDIA, a market leader with strong orders, faces high instability due to market mood swings, the fluctuations are even more pronounced for a smaller company. After hitting $1,000 per share, Supermicro took a hard hit in the stock market in a classic back-and-forth move. Though stock market ups and downs aren't new, we should be wary of another bubble bursting. Still, Supermicro Computer's rise is impressive. Despite all the controversy, the company has emerged as the latest winner of the AI craze that fund managers and shareholders have had to incorporate into their portfolios. We'll have to wait and see if this is just a random AI frenzy, or if it'll play with the big leagues in the future. But all the cards are on the table. If you enjoyed this video, don't forget to give us a thumbs up and subscribe to the channel for more insights from entrepreneurs whose ventures turned out remarkably well. And check out the thumbnail on your screen for another riveting tale. We'll see you there.